Hi, this is Tim Brien with Brien's Business Umbrella. We are a virtual national business advisory firm located. We do most of our work in the cloud, but we're physically located in Buffalo, New York. And this is going to be the second episode of my new podcast, which is Brien's Business Umbrella, no value added, which is wrong, business advisory. Today, this is a quicker turnaround in podcasts because as I'm building it, obviously you have to market it. And the title I thought was funny, but it's because I have been doing research and had thought about doing a podcast previously, and I was researching how you should title it, and one of the things is make it stand out. I found it humorous, and it's based, but I wanted to touch on it because it's directly correlated to a podcast that I was on recently, in which for David Schwab, and he does an excellent podcast, Western New York Entrepreneurs, and I highly recommend it. But we were having a little back and forth in regards to the content of my podcast, and then he sent something over where he's like, I'm not sure my listeners are going to find value in that. And then my first reaction was, what are you talking about? That was great stuff that I shared. And I was going on and on internally, and just with my wife, I didn't really say anything because everyone has their opinions, and it's his podcast, and he might be right that it's not appropriate for his listeners, which is what my wife was telling me, that sometimes I go on about stuff at a higher level or stuff that I feel is important, and maybe it's not. So that's right. Like I said, I had thought about it, doing a podcast, and it's like that in Johnny Dangerously. I don't know if you've seen that movie, but he gives his mother an ashtray for a Christmas gift, and she said, "Ooh, I've always been thinking about taking up smoking. This clinches it." Well, I had thought about doing a podcast, and then this clinched it because value's in the eye of the beholder, and I thought I gave a good value. And we're still going to do the podcast, and but it's such a short turnaround that it hasn't been re-recorded yet. So that's that. And the reason why I have decided to try this on my own, like I said, I thought about it, and I feel I have some good business tips that I get asked all the time. So I'm just trying to answer them, and then we'll go from there. And today's or the next podcast I had wanted to do was going to be on mindset, but today is going to be the biggest mistake that I see small business owners make when they do accounting or bookkeeping on their own. And that's an easy one in general, because if they're making mistakes, it is because they may have taken an accounting course or a business course, and but they haven't really done much of it until they had to with their own business. And that is, at least every accountant or business advisor might have a different answer. For me, it is the fact that you can tell that they haven't had accounting in a while because they completely misunderstand that what I see is that when their money goes into their bank account or money comes out of their bank account, they count that as income and expenses and record everything on the income statement, which is inappropriate because there's different things that affect the balance sheet instead. And if it's a balance sheet account, transaction, then it's not going to affect your income statement. And if you inappropriately record more income than you have, you don't want that, because obviously you're going to have more tax to pay. And then if you inappropriately, you count everything that goes out of your account as an expense, that's also inappropriate because you're going to underreport or overreport expenses, underreport net income, which means you're going to pay less tax than what you should. And that, again, is not good because that's when the IRS is going to start calling around, sniffing around, and possibly jumpstart an audit. And that's where I come in, is that you don't want any of those situations. You don't want to pay more tax. You want your tax liability reduced, but you want it reduced appropriately so that you're paying the appropriate amount of tax, the appropriate amount of tax that you should be paying. And then, you can do that in confidence when you work with me, because that's what I'm versed in, and that's what I'm paid to do. And, again, with the artificial intelligence that comes with like QuickBooks and just about anything nowadays, where they say bookkeeping's easy, they give you the green link and you just put it where they tell you. And if it's misclassified, automatically you have a problem in that you're going to overreport or underreport income and overpay or underpay tax. So that is the value I bring. That specific example with a newer client, well, now they've decided to stick with me, so now over a year has tangibly saved them $18,000 to $20,000 off the bat. And then it's, you can't quantify what it would go forward because they no longer have to worry about that headache because I have it going appropriate or properly. But if they had stayed on the wrong course, they could have paid thousands and thousands of dollars extra that there was no need to. And I'll just, being in the accounting field, I feel that's extremely valuable, a little remedial. But if you're newer to the accounting game, then it's not remedial at all, is it? So again, the premise is money going into the bank account, everything's getting recorded as income. Money going out, everything's getting recorded as an expense. And that is not always true. Some, just again, brief examples. When I went on an interview once upon a time with Sodexo from Marriott, they gave a prepaid expense example, how you would record it on your T chart there. And, I got it right. It was pretty easy. And I said, why did you ask that question? And they said, because believe it or not, this is an accounting position, and 85% of the applicants cannot answer that question. So that tells you something right there. So if you have a prepaid expense, where you're obviously prepaying your expense, your liability is still going to be cash, because there's cash coming out of the account. But now you haven't recorded, or you haven't created an expense yet. You've created an asset because you have something that's owed to you, and you will start to record that expense as you use it up. So the initial outflow of cash is not an expense. So that's one. And then on the flip side, if you get a prepaid deposit, that's not an asset to start out. It's not on the income statement to start out. Maybe the first month is, but it's actually created a liability because you've received something from someone, but you still owe them the service, product, what have you. So prepaid deposit on the initial transaction is not in fact an expense. Or is not in fact an asset. It is created a liability for the corporation until you supply the service. And again, the premise is that this is the biggest mistake I see, And by doing that, reporting income high or revenue higher or lower, or expenses higher or lower, you are either reporting too much or too little net income, and thereby paying too much or too little tax. So again, this is a very tangible example of how I can come in, create value for you and your corporation or business, and because I am saving my clients time, money, and headaches or stress by them knowing that their accounting, payroll, tax planning, tax preparation, or bookkeeping is being done properly, and they no longer have to worry about the stress and headache of doing that back office tasks on their own. And so with that was the point I wanted to make for this podcast. Money coming in is not always income on the income statement. Money going out is not always an expense on the income statement. And I wanted to give a little brief insight in case Mr. Schwab does decide to listen to and subscribe to this podcast. The thinking behind the name, I thought it was funny. No one else would have known anyway, but him. And he's a nice guy, so I didn't want to think it was out of hard feelings or anything silly like that. It was just I thought about it, and in my researcher podcast, like I said, they say good name, catchy name is important. It's catchy to me, and then I will see if it really catches on or not, and possibly change it. Everything's a work in progress, and with that, that's our little tip for today. Until next time, have a great day.